Most people hear about new tax deductions and they assume they're vague, complicated, or probably don't apply to me. That assumption is exactly why these deductions get missed. In 2025, Congress introduced several new deductions that apply even if you take the standard deduction, and when used correctly, they can translate into real dollar-for-dollar tax savings. Today, I'm going to walk you through the 4 biggest ones: the senior deductions, overtime, tips, and auto loan interest, with simple examples so you can see exactly how much they're worth. If we haven't met yet, my name is Alex Rivera. I am a licensed CPA and owner of Save Accounting. We work with high-income professionals and business owners who want tax planning that is clear, intentional, and defensible, not just a return that gets filed. At SEBA, our job isn't just to tell you what the rules are, it's to show you how those rules actually affect your money. Before we jump into the deductions, let me quickly explain how deductions actually work, because this is where most confusion starts. A deduction does not reduce your tax bill dollar for dollar. It reduces your taxable income. Your actual tax savings depend on your marginal rate, which really is the rate applied to the last dollar of your income. If you're in a 24% federal tax bracket, every $1,000 deduction saves you about $240 in federal income tax. Let's keep that in mind while we walk through these deductions. Number 1, the senior deduction. In 2025, taxpayers age 65 or older may qualify for an additional $6,000 per person, or for a married couple, that's up to $12,000. This is separate from the standard deduction increase for age. This is taxed on top of it. There are income phase-outs, and it's currently scheduled to apply from 2025 through 2028. Let's use a simple example. A married couple, both over 65, qualifies for the full $12,000 deduction. If they are in the 22% tax bracket, that deduction saves them about $2,640 in federal income tax. Same income, same standard deduction, over $2,600 saved by just knowing this exists. This is actually one of the most commonly missed deductions because many CPAs assume age benefits are already baked in, but they're not. Okay, number 2, overtime premium pay deduction. This one is widely misunderstood as well. Only the premium portion of the overtime qualifies, not your entire paycheck. So for example, if your regular pay is $10 per hour and you work 1 hour of overtime, that hour is paid at $15. In that case, only the extra $5, the overtime premium, qualifies for the overtime deduction. The original $10 is still treated as regular wages. The deduction is capped at $12,500 for single filers and $25,000 for married filing jointly. It does not reduce Social Security or Medicare tax. It reduces federal income tax only. Let me give you a quick example. Let's say a single taxpayer earns $10,000 in overtime premium pay during the year and qualifies for the deduction. If they're in the 24% tax bracket, that's approximately $2,400 in federal tax savings. That's not theoretical, that's real cash retained. But if the CPA doesn't separate premium pay correctly, this deduction disappears. All right, number 3, qualified tip income deduction. Despite the headlines, this is not tax-free tips. It's a deduction capped at $25,000, and it only applies to income earned in traditionally tipped occupations. That means it applies to roles like servers, bartenders, hotel staff, delivery drivers, and similar positions where tips are customary and expected part of the compensation. It does not apply to bonus commissions, consulting fees, professional service incomes, or tip that are effectively discretionary payments outside of a tipped role. It does not reduce payroll taxes, and 2025 has transitional reporting rules for W-2s because they don't clearly break this out yet. Here is a simple example. Assume a qualifying worker earns approximately $15,000 in tip income that qualifies for the deduction. If they're in the 12% tax bracket, that's approximately $1,800 in federal income tax savings. If they are in the 22% tax bracket, that would be approximately $3,300 in tax savings. Same income, different planning, very different outcome. Number 4, personal auto loan interest. This one is brand new. Interest on loans for qualifying new US assembled vehicles can be deducted up to $10,000. You do not need to itemize, but there are some strict requirements. The vehicle must be assembled in the US, income limits apply, and the VIN documentation matters. So for example, let's say you paid $6,000 for qualifying auto loan interest in 2025. If you're in the 24% tax bracket, that is give or take $1,400 in tax savings. Most people and most CPAs don't even know how this deduction exists yet, which means it often never makes it into the return. Here's the key takeaway. None of these deductions reduce Social Security tax, Medicare tax, or self-employment tax. They reduce federal income tax only. That's why they live in Schedule 1A after AGI, on top of this standard deduction. That's why sequencing matters. Two taxpayers can earn the same income, take the same standard deduction, and still end up in thousands of dollars of difference in their taxes, purely based on whether these deductions were identified and applied correctly. At SEBA, these deductions are not optional checkboxes. They are part of our standard analysis. We ask how income is earned, which deductions stack, where do phase-outs hit, what survives after sequencing. That's how we turn rules into results, not guesses, not assumptions, systems. If your CPA hasn't explained these deductions, hasn't shown you the math, or hasn't modeled the savings, that's your signal. 2025 rewards planning. It punishes autopilot. If you want tax strategy built for how the code actually works now, schedule a strategy call with Save Accounting, because knowing the rules isn't enough anymore. You need to know how to use them. If you like this video, please drop a like and follow. That way we can keep creating content for you. Thank you for watching, and I'll see you in the next one.